Welcome to Joe Knows. I'm so glad you're listening in. We have been talking about finances, and last week I started talking to you about how to create wealth, and I talked to you about real estate, about owning a house. What I want to talk to you about today is once you get the wealth, you want to have a way to hang on to it. So I'd like to talk to you about insurance today. Now, what is insurance? Insurance is something that insures when the unexpected happens, that you don't lose all your wealth, that you're protected and you're covered. So first of all, I want to talk to you about car insurance. Please do not drive a car if you don't have car insurance. Okay? Car insurance, when you have insurance on your car, if you have an accident and it injures someone in the other car, someone on the street, your insurance is going to provide them with what they need to get the medical care they need. So when you drive around without insurance, you're taking a risk with their lives. Now, when you get a general liability policy, it will cover accidents that are not your fault when it comes to your car, and if it is your fault, the other people that are affected will be covered. But if you have car insurance and only have liability, and you get into an accident that's your fault and the car is destroyed, guess what? The insurance company does not pay you for that. You need something that's called comprehensive insurance, collision insurance, and that covers your vehicle, your property, in the event that you have an accident that's your fault and you get hurt. So if you have an expensive car, you want to have collision or comprehensive insurance on that car, because if you have an accident, you hit a pole, you hit another car, and it's your fault, they will not pay to have your car repaired. They'll pay for the damages to the other person or the other objects that you might have damaged. So think about car insurance. Please don't be irresponsible and drive a car that you don't have insurance for. Second kind of insurance I want to talk to you about is medical insurance. Please do not have gaps in your life when you don't have medical insurance. You say, Joe, why do you say that? I really rarely go to the doctor. I get it. But if something unexpected happens to you and you don't have medical insurance and you survive, you're going to spend many, many years paying back all the medical bills that you'll incur. Now, if you're young, the chances are you're probably not going to get sick and need that insurance a whole lot. So you can get what's called cataclysmic insurance, which will cover you. The first $10,000 you pay in doctor bills, you will pay, but everything after that, and this is a kind of policy, would be covered by the insurance policy. So what that does is that helps you if you had a disease that's going to last for years and you're hospitalized for long periods of time, you will only have the deductible, that $10,000. You'll pay that out of your pocket, but the rest would be covered by an insurance company. I know people, I have a friend, a young man, he had a knee surgery, didn't have insurance, got the surgery. I know 15 years after the surgery, he was still paying off the medical bills. Someone else I know, they didn't have medical insurance, and the woman got cancer. And they were not able to buy a house for many, many years because they had $500,000 of medical bills that prevented them from borrowing any money, even getting a credit card. So you want to have medical insurance, and it helps you in the event that something unexpected takes place. You have that to cover you. The last kind of insurance I want to talk to you about is life insurance. Now, why would a person need life insurance? You need life insurance when someone else is depending on your paycheck, your ability to provide services for that person's life. So if you're single, you probably don't need life insurance, because you'd have to have it only, life insurance only kicks in when you die, and if you're single and you die, there's not going to be a lot of people that are going to be affected by that. But if you're married, your spouse is going to be affected if you die. Whether it's the man or the woman, so the primary person should definitely have, the primary breadwinner in the family should have a higher level of insurance because it has to be replaced when they die. If you are married and have children, I'm going to say you must have life insurance, because if something happens to you unexpected, your survivors, your spouse and child or children, are going to have a difficult time making things work. It's bad enough that you've left their lives, but now they're in a terrible financial situation. So if you are the primary breadwinner and are married and have children, I would recommend that you get term life insurance of at least $500,000. If you're young, you will be shocked at how cheap it is, but you can't get it after you die. You have to think ahead, and it's a great precaution to protect those that you love. If you are married and you are not the primary, but the secondary breadwinner, or you're a stay-at-home spouse, I would say you still have to, your services, there's no such thing as a non-working spouse. Some work outside the home, some both work outside the home, but the spouse that works, that manages the home is working. And those services, childcare, cooking, all the different things that go have to be replaced. So I would say for the secondary spouse, at least $250,000 of term life insurance. That will put you in a position that and we're going to continue talking about creating wealth through real estate, and then we're going to I'm bringing on a friend that we're going to talk about the stock market. But once you get the wealth, you have to be wise enough to protect the wealth that you accumulate. Insurance is something that we can do to help us to do that. I hope this is helpful. Any questions, comments, just reach out to me. God bless you. I'll talk to you next week.